The only reason people are solving to save dollars is because they priced everything in dollars. If they priced it in ounces of gold, they wouldn't solve to save dollars. They would realize that dollars are no better than monopoly money. Why would somebody try to hoard US dollars? Why aren't you hoarding Venezuelan bolivar? Why aren't you hoarding some other fiat currency? Because those are all worthless. Well, so is the dollar. It's just that, ever since Bretton Woods after World War II, the world thought the US dollar was the most valuable. And so people were hoarding dollars, but it's marketing. That's really it. There's no reason to hoard US dollars.
So here's the big question. How do everyday people like us who didn't grow up wealthy and were not taught how to be wealthy in school, how are we supposed to learn to think, invest, and grow wealth like the top 1% without compromising our ethics and our values? My name is Jeremy Whaley. That was my big question. This podcast will give you the answers. You're listening to Think Rich Radio.
Well, hello, everybody, and welcome to another episode of Think Rich Radio. I'm your host, Jeremy Whaley, with my co-host, Nelson Bran. It is great to be with you today. Good morning, Nelson. It's morning where I'm at. How are you today?
Fantastic, brother. It's a little rainy outside, but you know what? It's another beautiful day. So looking forward to a really great conversation once more, my friend.
As always, it's one of the things that people have said they really love about these Think Rich Radio episodes, even though we're calling it radio, there's video involved. Even though it's a podcast, it's really just kind of, an opportunity for people to be a fly on the wall and hear the conversations that we're having. Because for people who don't know, this is actually the conversations we have. In fact, we'll start a phone call and we'll be like, stop, we got to record this. And it's kind of what stimulated this. And I'm enjoying this. I'm really enjoying having these conversations. So what are we talking about today?
Well, if you don't mind, brother, I want to ask you what's up in your life, what's come up in your more recent consulting meetings. What do people want to know? What are they curious about? You tell me.
It's an amazing time to be alive. There's so much that's being developed right now, especially in the space of cryptocurrency and DeFi and Web3 and AI. I mean, I could just talk forever about these things. We could talk about AI agents. We could talk about the bots. Any one of those sound the most interesting?
Let's talk about the bots. I think the bots are a fascinating thing because it's such a new idea to the average would-be investor.
Yeah, let's do that. So for years, I'll give a little bit of background here. For years, I've taught people how to do discretionary trading, which if people don't understand that language, just means you're making your own trading decisions. Instead of going to a financial planner who then, ships your money off to a so-called money manager who statistically can't even match or beat the S&P, you're making your own trading decisions. And for years, they've indoctrinated people that you weren't smart enough to do that. But the truth is you are very capable. Everybody's capable of doing that. And it's just been part of their marketing media machine to keep your money and keep your funds. Well, one of the challenges of all traders as human executors of trades is the human emotions and getting all that just the humanity, if you will, out of the execution process. And we've often said if we could just automate the theory, if we could just automate the execution and not have the human factor, it would be almost perfect. And the beautiful thing is with AI and with the modern world, just technology in general, that's becoming not just realistic, it's here. Like it's reality now, and it's only getting better and better. So when we talk about bots, that's the general framework that we're talking about. How deep do you want me to go into the kind of technicalities of it?
So I do want to open up that these little animals, these little beings, they're adaptive and they're generative. And I want to open that up as to what does that mean and how do we compare that to a standard human? Why do we trust a bot trading our money as opposed to a human? How could that be better?
That's an awesome question. So let me give a little background here. Automation has been around for a long time. If some of your listeners may have heard of quantitative trading is simply a form of trading where your analysis is all based on technical analysis and technical indicators. Now, when we talk about automation or algorithmic trading, which is a popular term, simply takes that quant model and it automates it, running it through an algorithm. That's been around for a long time. And we can even go back to the 1970s and show a lot of those systems being developed. But what's different today is that we're not just running the algorithm, we're not just running the automation process, but now we're able to add in this new layer of AI, the artificial intelligence, which can optimize in real time. So, for example, let's say somebody took a trading system that might have had a 70% win rate. And you might say that it works on 50% of trades with a 70% win rate, and it works, and by trades, I mean stocks or whatever issue it's trading. And then maybe on 50% of the trades, it only works with a 45% win rate. You say, what's the difference in the half that only does a 45% versus the half that does 70? Well, different issues will react differently. And there's a lot of reasons that would happen. But the pure algorithm can't discern if it's trading, say, Apple, and it's beating it at a 70% ratio versus if it's trading, say, Microsoft, and it's beating it at a 45% ratio. So the pure algorithm itself is going to have, plus or minus. We calculate that with our risk reward. There's a lot of things that you can do to offset it so it still is a winning system, but there's imperfections in the system. Where AI comes in is AI can look at the algorithm and it can say, when you're running on these trades, on these stocks with this setup, with this economic environment, this is the win ratio and this is how we optimize for it. But over on these issues, here's how we optimize. So between the two of them, the settings might become just a little bit different, something that a human would never have gone in and optimized, but the AI can come in and optimize that automation so it becomes way more efficient.
I love that. And I love that they're solving for efficiency. And in doing so, they're considering all these different variables, including sentiment, including the capacity to have a disruptor ability during a market that's just running horizontal. They do look for weaknesses in the crypto space, in this case, when they're trading the top cryptos on the various exchanges. And so they measure all these things. But from all of those, when you give a bot a single focus of, let's say, arbitrage, and arbitrage is buying low and selling high. So it'll look at the multitude of exchanges and it'll buy low here and sell high there. And that almost guarantees a return because the exchanges vary. For Bitcoin, for example, recently it was as low as 78,000, as high as 82,000 on various exchanges at different times. So the bots are doing 100 trades within a single minute, and you can see how they ping pong back and forth. And so when people ask for a guaranteed return, there's no such thing as a guaranteed certainty in anything. But these bots, they don't care about the economy, whether we're in a recession, who's the president, whether it's a bull market. They're not solving for that. They're solving for efficiency.
Yeah, that's really great. Technically all trades are a buy low, sell high kind of an opportunity where you're trying to, even if you do it backwards, even if you short the trade, you sell high and you buy low, it's always an exercise of trying to make that spread. What makes arbitrage so unique is, in its purest sense, arbitrage is actually a risk-free trade. Now, there's a very, very small component of that could be a risky endeavor. But with the automation, with the AI, and with what we call simultaneous arbitrage now, it's essentially a risk-free trade. And that's what I love about it. We have a couple bots that are running that. I was already developing some bots, and then we came across the ones out of Europe that you and I have been involved with. And I've got a team right now in Arkansas that's actually working on our own version of that. So it's pretty cool. We've been pretty deep on that and excited to see that come to fruition. But you're right. It's just such a unique time in history where we can capture that profit, we can capture that spread, and it's all being automated and becoming more efficient over various outlets. For example, let's say pre-AI, we could have had a bot that was running the same arbitrage play between, let's say, two exchanges like Coinbase and Binance, but that would be the play. Where the AI comes in is it looks at it and says, well, the opportunity is not at Coinbase. It's between Binance and KuCoin. It's between Kraken and OKX or whatever. That's where historically, it would have been human intelligence had to analyze that. And now the AI is able to look at that, then go run the automation, and boom, it happens that fast.
And I love that word simultaneity that they're able to bring in, right? Where you're right. They look at the strongest exchange, for that particular cryptocurrency, and they look for the weakest one. So you can't call it a guarantee, but in the same manner, Jeremy, as Wall Street used to be hundreds and maybe more of men making buy and sell orders for pork bellies and wheat and oil and milk. And now a few bots handle that without any challenges whatsoever. The system runs so much more efficient. In fact, most people would be surprised to understand that AI runs a lot of our current world, including the signals, the red lights and green lights. A lot of our transportation is run through AI. A lot of things are being solved by AI, and the efficiency is there for AI. So why not trading on our behalf? In this case, these little bots, they don't tire, they don't complain, they don't get benefits, they don't need overtime, they didn't go out last night and drink too much, they didn't get in a fight with their spouse. They simply continue to do a repetitive task, increasing in efficiency, doing it better tomorrow than they did it yesterday. Why not?
Yeah, absolutely. I mean, we've had automation for a while. Bernie Madoff, for better or worse, he basically created NASDAQ, and he created the whole market making model that was the electronic market making for NASDAQ back in the 70s. That started this whole wave. And then we got into like the early 2000s when internet was really fast and we started seeing all this high frequency trading. But what what AI brings to the automation is it brings in a level of analysis and efficiency that previously we really didn't have access to. And that's why, everybody's moving here. Big firms are spending millions of dollars to develop this. There's a lot that's already been developed that we'll never have access to. But what's amazing right now, that's so exciting for people like you and me and for the people that are listening, is there's companies around the world now, multiple companies, not just a few, that are bringing this level of technology and this level of access to the small investor. And let's just stick with arbitrage for a minute. To do simultaneous arbitrage, you have to have multiple pools set up on multiple exchanges. Every exchange has to have a full funding in order to do that arbitrage. And so what companies are doing is they're funding it with people like you and me. They're letting people like our listeners, for as little as $100 or $500 or $1,000 worth of crypto, participate in those pools. And that's where the big money is coming from now. It's not the institutional funds, the historically institutional funds, there's some of that, but it's actually people like us that are funding this new wave. And it's so awesome that we get to participate in it.
It is incredible. And I love the fact that some of these newer companies that we're involved in, they haven't had to go to a bank to get a loan. They haven't had to go to an institution or even some of the larger angel investors. No. Instead, they're going to the general public and they're saying for as little as $150, give or take, you too can participate in this. It isn't limited to accredited investors or to people who've had a lot of money for generations. Now, a single mom with children, a waiter or a regular guy like me can participate in this. So again, that goes back to the conversation of the new decentralized world that's opening up for all of us to participate in, should we choose to. But it involves a level of risk only insofar as we're participating in something that's so new that the old system didn't tell us about, certainly didn't prepare us for, where things seem almost too great to be true.
Well, it's interesting. People assume that if something seems too good to be true, it must be super risky. The element of risk that poses the greatest risk here, if we think about what is risk? Risk is a potential for, outside disturbance. It's actually not the trade itself. The trade itself is extremely low risk. What poses the greatest risk is governments. What poses the greatest risk is outside forces that want to enforce some kind of regulation or something that's going to be disruptive from the outside. The trade itself is actually almost a completely risk-free trade. And that's what's really unique about it. If you want, I can go deeper in that. We can kind of explain how those profits happen, or I don't want to get too detailed. You have to stop me before I get too nerdy.
Let's do this. I do want to know a little more, but if you don't mind, I'm going to add one caveat, which is this. Yesterday, in a conversation with a friend, he went ahead and said, Nelson, cryptocurrencies remain a scam. There's still a super high risk market to get into. And I said, assuming that's true, what do you suggest in lieu of taking a risk into the AI slash cryptocurrency? Uh, what do you do? What do we do as opposed to getting into those markets? He said, well, put your money in the bank. That's where it's safest. That's where it's always been safest. And I thought, oh my goodness, no. I said, and he says, yeah, just put it in a savings account. And I thought, that's all we know. We just solve for the safety of, you know what, I'm not going to take a risk into the unknown. I'd rather do what I've always done.
Yeah.
And I just want to add that to this conversation.
The only reason people are solving to save dollars is because they priced everything in dollars. If they priced it in ounces of gold, they wouldn't solve to save dollars. They would realize that dollars are no better than monopoly money. Why would somebody try to hoard US dollars? Why aren't you hoarding Venezuelan bolivar? Why aren't you hoarding some other fiat currency? Because those are all worthless. Well, so is the dollar. It's just that, ever since Bretton Woods after World War II, the world thought the US dollar was the most valuable. And so people were hoarding dollars, but it's marketing. That's really it. There's no reason to hoard US dollars.
Zero reasons. With the true rate of inflation, with every dollar we save, whether it's in the bank or in our own possession in cash, we're losing. So for that reason, we're talking about this. Jeremy, why don't you go a little deeper into the arbitrage? And if we're going to keep this one at 30 minutes, if we can limit our conversation to the next maybe 7 minutes or so, I think we'll be good. What do you think?
Yeah, we can do that. But you actually said something that I want to tap into about inflation. When people think about investing, I really hope people shift their mindset to realize that the purpose of investing is not to store wealth, and it's not necessarily to grow more US dollars. The purpose of investing is to put your asset to work so that it actually grows in its overall value. Let me say that differently because that didn't come out very well. If you want to put money into the bank and you call putting your money into a certificate of deposit for 1 or 2% investing, then what you've also got to factor in is, what am I missing out? If the rate of inflation is 10% and I'm only getting 2% of interest, I'm actually losing 8% of my money every year. So you asked your friend a question, where should we put our money if not in cryptocurrency? What other asset is going to outrun inflation faster? And that's the question that every investor should be asking, is where can I put my assets to work that I will outrun inflation faster? And that's the ultimate question. So if you can buy into Apple stock and you can gain at 20% a year in Apple stock, then that's where your money should be. If the trend shifts and Apple's moving down, you should go back to US cash because you're not going to outrun US dollars if Apple's falling. That's the way people need to learn to think about investments. Too many people think that they just park their money and they leave it forever and it will just grow over time. It's actually completely backwards. If you look at gold, you say, why does gold keep going up? It doesn't. Gold never goes up. An ounce of gold today is exactly what it was worth 1,000 years ago. The same 30 ounces of silver that they betrayed Jesus for is worth the same 30 ounces today, 2,000 years later. What changed? The silver didn't change. The metal didn't change. The dollar changed. And if people can flip their mindset and say, I've got to put a percentage of my assets, my holdings to work to outrun inflation, now they realize I don't have a choice. Not getting into what I would perceive to be riskier is actually riskier than getting into what I would perceive to be risky. And so it's a kind of that game. That's really the challenge, is the game of outrunning the inflation that the government and the Federal Reserve System has imposed upon us.
I love that. And that was the conclusion with that conversation with a friend and I, which I said, if you're really trying to avoid risk, then get out of the dollar, because that's where the real risk is. It is not in these new startup companies. It is not in these new technologies. They're just unknown to us. They're foreign to us. So we have to learn them. And so, again, that's why we've created Delta Chain Labs Academy, for that very reason. But yeah, the high risk is doing nothing at all, Jeremy. That's the high risk.
I didn't understand, several years ago, I didn't understand, because I was still relatively new in my investing and financial journey. I didn't get the inflation component the way that I get it today, but I heard a a top manager, a senior manager of a major hedge fund that was like I think they had 20, 40 billion under management. I forget what the number was, but it was a huge number. And he was talking about what do they do with the cash on hand when it's not invested? Because, whether people realize it or not, a lot of times you close out investments. Now you've just got cash that's waiting to be invested. And he laid out what they do, and they basically divide all cash on hand among 4 fiat currencies. The US dollar was one of them. At the time, the Swiss franc was one of them. I forget the others that they divided among, but they literally take 25% and they go among all these different fiat currencies so that it rebalances a little bit. So as these fiats, which are floating against each other as they move, their overall cost basis, their overall balance doesn't lose a lot of buying power. And that was one of the first times I really reframed how volatile the US dollar is. And I never had ever considered that before.
Well, think about what you just said. You didn't say right now that these paper notes are being backed by something physical. And I don't care if it's oil or gold or businesses or nuclear power. It doesn't matter to me. Land.
Yeah.
No, you said that they're balancing one another. A bunch of monopoly money, paper notes are attempting to balance one another. There's a level of fragility in what you just said. And there's a high risk to what you just said. And I'm not saying that they haven't been able to maintain this for quite a while, longer than really, I think, should have been the case. But it's something we can't, based on the next big print that's coming, it's something we can't continue to bet our dollar bills that they're going to be there to buy as much as they did yesterday, tomorrow. They just won't. The purchasing power of the dollar isn't there now, and it can only worsen from here on forward. There's nothing that can alleviate it. Nothing.
Right. Except for getting into limited resources. And limited resources could look like precious metals, but precious metals are relatively illiquid. They're not completely illiquid. You can go sell them, but it's much more difficult to go liquidate a bar of gold than it is to liquidate Bitcoin. And that's why Bitcoin is so valuable, because it can be divided into 9 decimal points. You can't divide an ounce of gold into 9 decimal points. You can't if it's tokenized, but it can be traded literally that fast. We can move thousands of dollars. I don't know if your listeners have tried to move, $100,000 from the bank, but it's not an easy thing to do. If you want to move $100,000 from bank A to bank B, you can't just walk in and withdraw $100,000 cash. You can write the check. It's going to take a few days to clear. You could go wire it. They will question, why are you wiring this? What's the source of the funds? You just go down the list. They may decide to wire it or not wire it. I actually had this happen the other day. I had a client that was trying to wire $50,000 from his bank to Coinbase. And the bank stopped it. And they said, we don't trust this company, Coinbase. But this is a multi-billion-dollar publicly traded operation. It's a financial institution. And you're blocking your client's money. They said, well, we don't want to do it. It's like, you can't tell me that they have that much control of your money. And that was a relatively small amount of money. Now, scale that up to somebody who wants to wire $1 million or 10 million or 50 million. It can take a long time to move US dollars, these paper dollars that are worth not much more than monopoly money. But with crypto, how fast could we have moved that? We could move $2 million between you and me on Bitcoin, probably takes 45 minutes. On Solana, it probably takes about 45 seconds. That's how fast the blockchain makes it reality. And the beautiful thing is, people say, well, it just feels so risky. It's actually limited. There's only 21 million Bitcoin. I know people don't realize how valuable that is, but there's only 21 million of them. You're moving from this paper asset that is infinite printing over to something with finiteness. I don't know if that's the right word. That's why it's holding value. It's not risky.
So Bitcoin, I've been into Bitcoin for many, many years, but the realization of how scarce it truly is, how it really is the scarcest asset around right now. And I'm into precious metals. I'm into real estate. I'm into multiple businesses. But in truth, I want my savings. I want that which pays me to own it to be namely Bitcoin. Not just because It's about to do some incredible things as the dollar gets printed again. But also because I get to custody that monies. That's what it is within my own possession. So that be it Zelle, Venmo, Cash App, a bank wire, whatever it is, they can't limit the amount I'm sending. They can't time it out for a particular amount of time. You mentioned Coinbase. Coinbase has frozen some of my friends and clients' accounts for a week or two or three or four. And they'll freeze it for our own protection, is what they say. So, and they'll also refuse to send monies wherever we want to send it. So we definitely want to move towards custodying our own money. And that's part of the whole decentralization philosophy, right? Yep. Peer-to-peer, from me to you, and in my own custody. I have my own money to do with as I see fit. Regarding precious metals, I said to you in the last video that I made some new friends in Paris that were from Africa, and they felt so comfortable possessing physical gold in their own vault at home. And they felt a level of freedom that is unimaginable to the average person because they have it, they hold it. And it's in gold, it's not in paper notes. They don't seek to stack paper notes the way that we're encouraged to do so here in America now.
Yeah. What other resource, digital or analog, are governments trying to hoard right now? What other resources are they going out saying, I want to take 5% of our treasury and acquire this?
So if we notice what just happened, whether it's in Venezuela or soon to be Cuba, there are precious metals, there are rare earth metals, there's energy. Right now, there it seems to be a world domination arm wrestling match that's occurring between the largest nations that are pursuing land, labor, energy, commodities, metals for sure. And they're doing it en masse.
Yeah.
And in this case, oil specifically. So that's happening fast. I'm not sure if that was your question.
No, I was just saying, I mean, you answer, they're going after those natural resources, but from a currency standpoint, it's Bitcoin. That's the only thing that they're hoarding after, is Bitcoin. The U.S. government has said they're going to buy up 5% of the available Bitcoin. That's incredible. You know, when we look at the U.S. dollar having been the world reserve currency for all those decades, people wanted U.S. dollars. Well, that's moved over to Bitcoin. People want Bitcoin. There's a high demand for it, but there can only be 21 million. So we're not going to see 42 million get printed. We're not going to see 42 billion get printed. There's only 21 million. If there's that much demand for something that has such a limited supply, there's only one direction for the price to go. Then yes, you know the metals and all the other resources as well. But I'm just talking about in the digital space. That's where all the demand's at.
In the digital space, no doubt. And what's interesting about Bitcoin is if you ask the average American about it, they'll say, I'm not very interested because it pulled back from its $120 marker. It's back down dancing between $70,000 to $80,000. And they can only think in those terms because we're denominating it in the dollar. We're trusting the dollar to be a good metric of value, which it's not. The proof of that is, to your point, the governments, corporations, World Financial, they're all going after Bitcoin. Michael Saylor he's arm wrestling with BlackRock, right? With a few other entities that are all trying to position themselves to acquire as much Bitcoin as possible. Not for what it's worth today, but for what it's going to be worth on the other side.
Yeah. What would help people out is if they stopped trying to compare Bitcoin to the US dollar, if they started measuring the value of Bitcoin in gold, then they would realize that acquiring more Bitcoin is a better move, period. Because what happens, prices are always going to fluctuate when you're pricing it in a fiat currency. If you're pricing something in US dollars, the dollar is always going to fluctuate. Values will appear to go up and down because you're solving for dollars. I know you're like, well, that's what I spend my money in. That's because you're in America. If you're not in America, my wife grew up in Brazil. Her mom always had a safety account of US dollars because the Brazilian reais was so volatile. Okay. So people who don't grow up in America, they have a much better understanding of this. That's why they adopted crypto so quickly. But Americans are so married to, I need more US dollars because that's how I pay my bills. if you would look at it the other way, how much Bitcoin have I saved? How much fill in the blank with your crypto? How much XRP have I saved? How much Ethereum have I saved? And when you do your calculations, if you flipped your chart, if instead of pricing everything in dollars, if you priced it in gold, or if you priced everything in Bitcoin, that would help you decide, do I want to buy more Ethereum right now, or do I want to buy more XRP based on how it's performing relative to Bitcoin? So people just have to learn to think completely different about what they're trying to solve for and what they're trying to hoard and get more of.
I agree. And that tells me the following, Jeremy. You and I need to put together a Zoom that's going to be live so we can have folks chime in with questions, because how can we serve people? How can we shoulder our fellow Americans into this new paradigm? We need to put it into action. I think we need to do that next. Jeremy, If somebody wanted to find you, where would they find you, sir? How can they get a hold of you?
TradeMaestro.com. You can email me, Jeremy, at TradeMaestro.com. And Maestro is M-A-E, like the traditional spelling of maestro. Some people try to spell it with an I, but M-A-E-S-T-R-O. It's also on the video here. TradeMaestro.com.
Outstanding. Anyone could reach me as well on deltachainlabs.com, as well as Bran Nelson at yahoo.com, my last name, BRANNELSON at yahoo.com. I was about to give up my phone number.
Yeah, we won't do that. But you know what? I'll write it in a bathroom for you with a little message. It's a call for a good time.
I don't know about that, brother.
Hey, thanks for being here, Nelson. Thank you for everybody listening. I wish you all the best. Like and subscribe if you haven't done so already. Check out what they're doing over at deltachainlabs.com. Check me out over at trademaestro.com. And Nelson, I look forward to our next conversation.
What a pleasure, brother. Have an incredible day. Thank you.
You too.